Okay, I hope y'all ready. Let's go. First block. Yeah, I guess we'll do this in blocks. First block of notes, okay? Mutual funds. So when we started this, we started talking about Treasury Direct, right? Which are bonds. And then there's also something called mutual funds, okay? A mutual fund is less volatile, right? So mutual funds is something that is really for retirement. And I don't really mess with them, right? I'm bonds and stocks, okay? But if you talk to a lot of older people, mutual funds were top notch for them, okay? So that's something, maybe if you're really young, I would say like in your 20s, consider them, because you just put a little bit of money in there and that thing will compound until you're, when you're like 65. But they're not as great as they used to be, but they're definitely a leg that you should look into, okay? Okay, this course is going to focus on stock equity. Now, one thing, just an overall principle about stocks, is that they are more volatile. And, the guidance I got was that stocks, are money that you can afford to lose. But I've made money so consistently with stocks that I don't really see it that way. I do see it as, if you're going to purchase stocks and not pay attention to them, then you can think about losing them. But if you're going to purchase stocks and pay attention to them, and when I say pay attention to them, I mean, every day, look on your account every other day. Now, when we start talking about what we're not going to talk about, because I don't do it, but you guys might have heard of options trading and options, right? That is ways for you to make money like now, like today, right? And the problem with that, and trust me, I've been there. I tried. I studied it, the charts and the lines and the wicks, and I went down that rabbit hole, okay? The problem I have is the fact that I am a mother, wife, full-time employee, and business owner. And frankly, I didn't have the time. Just meaning the time that it takes for you to basically, when the option goes and your option gets called, like, you gotta be at your computer. You have to do something or you risk losing your investment. I didn't have that kind of time. And I remember I had an option out, and I only, I didn't do money that I was going to have a heart attack if I lost, right? I had an option trade out there, and it was about to be executed and closed, and I had to go sell it, and I was not at my computer. I was at the park with my kids, and I lost all my money. So for me, that was my trigger that this is not for me. I'm not someone who, I'm a woman, right? I wear multiple hats. So it was not for me. Options was not for me. I would say options are for people who can be at their computer without distractions, and they can actually be on executing the calls and puts as need be. Okay. That's my caveat about that. But we started off picking up where we left off in the last video. Bear market versus a bull market. Okay. Now, if you follow any stock news, anything, they'll say, oh, it's a bear market. It's a bull market. It's a bear market. It's a bull. What does that mean, right? So a bull market essentially means you need to think about it like the animal, right? And it is a bear. But did I say bear or bull? We'll start with bull. Sorry. A bull market. Okay. That is a bull with the horns, right? And so you need to think about it as charging through the index, right? Charging through. So I like to think about it is basically, in a bull market, I make more money faster. Okay. Now, what administration brings a bull market? Republican administration brings a bull market. They have for the past, I'm going to say about 10 years, right? It's not hand in hand, but that's just the way it's been. Now, it's good. The good thing about a bull market is you do make money faster. You see your stock goes. That's when all the highs get hit. That's when, your record breaking profits. That all happens during the bull market. Okay. So you would think, oh my God, Sophie, that's so great, right? We are investing for our retirement and for the long term. Okay. So if that's the case, then let me tell you the value of a bear market. So a bear market is just like a bear when it means it hibernates, right? So in hibernation, there is a restoring of energy, right? So that's not essentially bad either. The Democrats normally bring on a bear market because they're not business, I don't want to say they're not business savvy politicians, but they do it on the back end. So what a Democratic bear market looks like is that the market's not charging through new and not making record profits. They're not breaking the indexes, right? A lot of times in bear markets, you'll see corporations do a lot of their earnings projections, right? And in the Democratic administration, they won't say anything to you, but they are actively investing for the long term. So in a bear market is when you honestly get your money together. In a bear market is when you hold your money together so you can invest in high quality stocks that when the bull market comes are going to charge you. For example, Google. Google is an expensive stock. And I had to save up money to buy Google. And not the cheap Google. I'm talking about the $3,000 a share Google. So I saving up money through the bear market and I bought it. And it was down. Like I bought it and, I only buy on a dip. And it was still dipping. I was losing so much money. I was so pissed, right? Oh my God, I'm pissed. This is through Biden. I think I bought it maybe about a year and a half ago. Got my $3,000 some dollars for a share of Google, okay? It was doing terrible. I'm losing money. My mentor is like, hang in there. Because I was only able to buy it because it was a bear market and the stock price was low, right? Hang in there, okay? I bought it. I put it in my SEP IRA, which is a business investment account. We'll get there. And I let it sit, okay? Sure enough, come right around these Republicans. And where are we at? We are in the green. I have made all the money that I lost plus some, okay? So a bull market is a market that's charging ahead. You'll hit record highs, but your stock price per share will be higher. On a bull market, right? Yes, bull market charging ahead, stock price will be higher. Bear market, stock price lower, it'll move lower, but that's when you prepare yourself for the bear prepares for the bull.